I'm a big fan of Mohnish Pabrai. I love looking into the picks that he has in his portfolio, especially some of his Turkish companies and Indian companies. I found it very interesting to research them. I did do a lot of videos on him here on the channel, on his Brookfield pick and a few other of his previous investments. And even though he recently blocked me on Twitter, I'm not sure why. Maybe because I commented on his latest 30F whenever I said he sold Brookfield to buy, coal stocks, which was 100% facts. I didn't say anything wrong, but I still got blocked, and a bunch of other people got blocked too, which I'm not sure why, but I still like him. I still watch his videos. I still research his stuff, and I recently found out that he has a fund called the Pabrai Wagons Fund. I didn't know about it before, and he apparently invests in over 15 to 20 high quality companies, and the expense fee is a little bit high. Retail investors can buy it on Interactive Brokers and Vanguard, but the fee is like 1.5%. For me personally, this is a little bit high unless the returns were astronomical, and maybe they could be if he invests in a lot of the Turkish stuff. And I decided to look at his portfolio here, and there's something that stood out to me. I researched all these stocks pretty much. The coal stocks, yes, some of them look undervalued. The airport company looks undervalued. Brookfield is not bad. Microsoft is on the higher end. But one of the most interesting ones in his portfolio was actually eBay stock. eBay, this is a classic Monish Pabrai or Warren Buffett portfolio. Some kind of a stock where people believe it's dead, it's dying, all these kind of things. Value investor stuff. But it's actually not dying. It's not as bad as people believe. And they are buying back over 15% of the market cap every single year at very low prices, sitting at 52-week low. So this is an extremely interesting investment. I might actually buy it in my portfolio a little bit later on. I'm still thinking about it. I'm still researching it. And I'm going to share my research here in a video about eBay stock, which is around 3% of his portfolio. Now, looking at the stock itself, eBay has not been performing well, as most of you can guess. It's still sitting at the same level it was sitting at in 2019. So it's been flat for pretty much 4 years. It topped out around $80. And now it's sitting at $41 per share, pretty close to its 52-week lows. Now, a lot of you might believe that eBay is dead. No one uses eBay anymore. Why would you use it? You can use Facebook Marketplace. You can use other kind of alternatives to sell online. Why would you ever use eBay? eBay is dying. Well, the numbers are not proving that eBay is dying. There's still over GMV around $18 billion of GMV, gross merchandise volume. Revenue is still around $2.5 billion. There's still over 16 million enthusiastic buyers, and there's something like 160 million members or 180 million members. I have to look at it. But there's a lot of money going through eBay, but eBay doesn't know how to monetize this platform. And this has been recently changing with a lot of the changes that the CEO has made. But I personally don't believe eBay is dead. Yes, maybe eBay is not growing, but I don't think it's going anywhere. It's the same with my thesis with Dropbox when it was sitting around $18. People will tell me, why would I use Dropbox? I can use Google Drive. It was a big misunderstanding. People were still using Dropbox, especially a lot of schools, institutions, business owners, and Dropbox is still going. And it's the same thing with something like eBay, especially with the recent innovations with AI. I would highly encourage you to watch or listen to the latest earnings report from eBay. And the CEO talked about AI and what they're doing with it. For example, you can take your phone and take a picture of any item you have in your house, maybe a remote control or a watch or a mouse or something. You could take a picture of it, and eBay will tell you exactly what this item is. It will tell you, what to price it at. AI will write the description for you. You don't even have to write the description. It's going to set the price, set everything, and you just click, you take a picture and you click done, and you could just list and sell your item on eBay. Well, this is not available on something like Facebook Marketplace. It's not available in many other places. So eBay is trying to innovate again. It's trying to differentiate itself again. Maybe if the CEO talks about AI a little bit more, it could have moves like NVIDIA and something like Palantir if they talk a little bit more about AI. But there's some pretty interesting innovations within eBay. It might be a dying platform or a platform that's not growing, but there's still over 18 billion GMV going through eBay, and eBay just doesn't know how to monetize it. And this has recently been changing. And one of the things that I'm very excited about with eBay is the advertising revenue. It was the same thing with something like Amazon. Amazon charges sellers something like an advertisement fee if they want their product to show up first or second on the page. And a lot of these sellers are willing to pay up top money for their product to show up first or second whenever you search for a blanket or something. And it's the same thing that's happening with eBay, and their advertising revenue has been booming. You know, a lot of sellers are paying up because they want their product to show up first or second on the page. And this has been very, very powerful with Amazon and eBay. And it's something that I'm very excited about with this stock. Now, if I look at where eBay is trading at, it's trading pretty close to 9 times earnings. I mean, this is a classic, value investor kind of stock. People believe it's that, but it's not that. It's still pretty stable, trading at 9 times earnings, which is not bad for a company that has over 22% net income margins, very high margins for a company trading at 9 times earnings alone. Even though the company is not growing. But the best part about eBay is they are unlocking massive shareholder value by actually buying back 10 to 15% of the market cap pretty much every single year. We can look at the history here, and I can put it here on the chart so I can show you what percentage of the market cap it was. It was something like 15% in 2022, 7% in 2021, 16% of the market cap in just 1 year. I mean, this is a massive, massive buyback program. I'm loving it with eBay. I love what they're doing. This is going to create massive shareholder value in the future once, investors realize that eBay is not as dead as it looks like. Maybe the multiple could readjust a little bit. The share price could go up. And this is a massive shareholder creation strategy from eBay. They have like a 2.5% dividend, and they are buying back 10 to 15% of the market cap. And they are not borrowing money or anything crazy to buy back stock. They have cash and cash equivalent around $4.5 billion, and their long-term debt is something like $6.9 billion. So it's not too crazy, not out of control. The balance sheet is not bad. And if you count the equity investments, they actually have net debt something like maybe 100, 200 million. So it's pretty much nothing. So the balance sheet is not bad. Over 22% net income margins, trading at a distressed level of 9 times earnings. It used to trade as high as 19.5 times with a mean of 13, and now we're getting it for 9 times earnings, buying 10 to 15% of the market cap every single year. This is pretty amazing stuff. The only bad part about it is that eBay is not growing too fast. Most of you know that. Maybe it's going to grow 1 to 2% in net income or revenues every single year. Analysts are projecting pretty much flat revenues over the next 5 years, which is not the story with eBay. Not every stock you buy needs to grow revenues. Some of them are just incredibly undervalued. And if the revenue stays sustained or the net income and they use it to buy back stock and issue dividends, maybe something like Warren Buffett would love that. This is why he invests in a lot of companies like HPQ and many others. They don't grow very fast, but they have a massive shareholder yield where they return value to shareholders. And this is how the value is returned. It doesn't have to be through revenue growth or net income growth. And I'm personally seeing something like a 10 to 15% return, closer to 15% with eBay, because it's trading at around 8 times free cash flow. They are buying back 10 to 15% of the market cap, and I see a 2.5% dividend. So in total, I see a shareholder's yield or shareholder return around 12 to 13%. This is if eBay never grows net income or revenues or free cash flow again, and if eBay's PE ratio stays at 9 times earnings. Now, if the multiple gets back to a more of a historical average of around 13 times earnings, then you're talking much more than something like 13 or 14% every single year. So there's also some kind of a margin of safety with eBay. I mean, I just love this investment. It could be a value trap. This is a classic value trap the way it looks, something that has high margins and a low multiple and buying back stock. It does look like a value trap, but I'm personally not seeing it. I don't think it is a value trap. It's a little bit tricky sometimes with these stocks, but I love this pick from Mohnish Pabrai. I'm considering it for my own portfolio. I share such things with my own group if you're interested in joining. But I do love it. I'm going to continue thinking about it, and maybe I sell some puts or open a position. But this was my opinion on Mohnish Pabrai's stock. It was not financial advice, of course. Thank you so much for watching the video. I really hope you enjoyed it. So if you did, all I ask, please press the like button and maybe consider subscribing. So I hope to see you in another video.